Yeah, so when you guys get the word that we're live through, please, I'll just take a look at the first thumbs up, please, to let me know that the audio is coming through fine. So if I could get a courtesy from the group, this is opportunity hour for the Independent Investor channel for folks subscribing to the message can come in. Awesome. Ernest, thank you. I appreciate that. Still a little bit gun shy with regard to our home networking system here, but we make it work. We provide an opportunity every Friday evening at about 9 o'clock Eastern Standard Time for folks to make their way into the group. Drop your questions in. I cover a lot of emails. Obviously now there's been an uptick on the channel. There's a ton to talk about tonight. I didn't need to even script an agenda tonight. I figured I would bounce ideas off of you guys, honestly. And if you guys have questions for me, you know, sometimes when you hit me up direct message and you send me a super long email, there's a ton of questions that are generated from that. And I typically have to respond with those questions, you know, and asking you to clarify. Sometimes the live stream that I do here every Friday might be just as good as an opportunity for you to come in and strike up some dialogue. Not only do you benefit from that, but there's others in the community that benefit as well. If you guys haven't got the theme a little bit, I've digressed a little bit to more, again, of the mental approach to the stock market. I want to make sure that if folks are making their way into the community, we can have these live streams and we can talk about anything under the sun. We certainly can. Investing is my favorite topic. That's typically what the conversation revolves around. But if you guys want to talk about real estate, you know, what my thoughts on cars in here, we can. But the reason why I'm offering some of those fundamental videos, like the couple that I released this week, and I've got a couple that are scheduled to come out as well, with regard to avoiding gaps and overlaps in your portfolio. That's going to be a good video. That's already done and ready for print. I will probably release that tomorrow. And then I've got a redo again on the rule of 72. I did the rule of 72 for Scribner, and I haven't released it yet to my community. And I think you guys will appreciate how simple that is for you, for you guys that have been investing for a while. Obviously, the rule of 72 is not going to be something that's new to you. But for you guys that are new to the community and you're in your late teens, early 20s, and you've heard of the concept, but you've never had it explained to you, I think you'll find that it's extremely interesting the way I explain it to folks. Very, very simple, but a very useful tool. You know, a lot of people want to forecast forward and look 30 or 40 years into the future and see where they're going to be. You know, the rule of 72 kind of gives you those strategic breakpoints at the doubling cycles. And it'll tell you how many years it'll take for your money to double over a certain cycle. But look forward to that. That'll be released Sunday evening as well. Got some great news on the channel. I wasn't identified. I got some correspondence from Google discussing a lot of accounts were closed, I guess, through YouTube. I lost 30 subscribers, so not bad. I can live with that. I guess the rest of the 10,000 subscribers were legitimate subscribers to the channel that tune in and watch the Independent Investor channel, either regularly or not so regular. I'm fine with that. I'm all about loyalty. Utilize the information how you see fit. But I did lose 30. I'm just wondering, I don't keep a whole lot of tabs on the YouTube community, but I am interested to know if anybody else was affected. Certainly some of the larger channels. Sometimes I just shake my head and I don't understand how they've got, you know, the subscriber base that they have. But they do. And just kind of wondering, you know, YouTube kind of went through and cleaned some house and got rid of some of those accounts that were, you know, pay for subscribers, things like that. You're not supposed to do it. You're not even supposed to do sub for sub. And that was also in the correspondence. And that's why I typically try not to respond now, especially on some of the other bigger channels. I just don't want that to be misconstrued as you know, trying to gain subscribers in an unethical way. So that's the way we're doing it. I was happy. 30 subscribers gone. They didn't exist anyway, honestly. They were probably accounts that had closed over the history of the channel here. 2 years on the independent investor channel, and then over that time they've probably either went deficient or they've got a strike against them, and YouTube has booted those folks off the channel. And I saw the subscriber count go down today. I lost maybe 30 or 40 subscribers today. So I'll drink to those guys. See you later. Good riddance. They never existed. I don't know if they were robots or real people. I have no idea. But it's time to focus on the folks that we're here to focus on. I've got the channel creators again in the group. I've got Brent with the financial investor stirring up discussion in the group here. I also have Lydia as well in the group. Probably is going to talk about some of the Robinhood features that obviously turned out this week. So therefore you had a bunch of people that are riding that quest of information or crest of information on the wave. I did not do a video on YouTube. I will save that for her to discuss, as she's probably a little bit more in tune with Robinhood. She's obviously a product user and knows much more about the platform. So I'll leave that to her. I would assume that she's probably going to be doing a live stream after mine, as she's broadcasting from the West Coast. And I've got to throw down a little bit later on the East Coast, but that's totally fine. I am going to scroll up here and kind of get started, but just kind of before we get started, I really want you guys to understand that if you guys have friends or if you're at a party, honestly, plug them into the channel. Let them know that they've got an opportunity to come on here and converse with somebody who does investing. I will turn you guys on to all of the stock moves that I made today. I was like a kid in a candy store today, actually. I was glad to see what I saw. Up some of my position in the sector spider. Took a few bites of some single stock as well, just some starting positions in those. Added a big position in Apple computers today. I've been sitting on my 21 shares. I actually made a position buy today of 30 more shares. So that put me up over 50. I've got 51 shares now of Apple computer. Took a bite right here, just an unloved, untalked about financial stock in Morgan Stanley. Picked up, I think, 80 shares today. That was a fairly decent position in Morgan Stanley. Got it sub 40. I think I got a bargain there. Price to earnings ratio below 10 for a quality managed company like that. It was a steal. It was too much to turn down. So I'm going to get to the community here and see what kind of questions you guys have. There's obviously just a ton of people here, and I just want to thank each and every one of you guys. I've got Jared Odell. I've got Ernest representing really just the core of the community here, both on YouTube and in the Facebook group as well. We just got some killer information flowing through both conduits with the independent investor channel, and I couldn't be more satisfied. I almost wish I could duplicate myself sometimes. I get a little bit run down a little bit. It's a lot filming content. I've been on a filming rampage. I threw down 4 videos this week. And so you'll see that content come out tomorrow and Sunday respectively. So please keep your eye open for that. I'm sure you'll enjoy that content. Again, with every niche that I come out with, whether it be for, an 8-minute video or a 15-minute video, some of the longer videos are aimed really more toward the loyal subscribers of the group who don't mind sitting through a financial piece. Guys, 8 minutes is not enough. I'm sorry. It's just not. And I'm not polished enough to where I can get on and it's done and we're over and I can shut it down and get 1 million views on my videos. I don't know if I'm capable of doing a viral video. I don't know. I may be surprised here. Maybe within the next 10 years, I'll get my first viral video. But honestly, I don't want to attract attention to the channel for folks that just come on and maybe watch a viral video and never come and really relate to the message, because I think it takes some time, I think, to relate to the message that we're putting down, just like it takes time to build an investment portfolio over your life. It certainly takes time to understand the benefit of a channel like the Independent Investor channel, this hour of opportunity to engage, and just sit across from me and just talk and converse. Get some questions out there, man, for the good of the community and also for the good of yourself, man. Be selfish. I mean, if you've got a question, throw it out there. Don't be afraid to you know, you don't even need to polish it up, man. Just let me have it, and I'll do my very best to help you. I just enjoy the heck out of it. Not too challenging because it's on the fly and I do this live, but I'll do my very best to find you guys an answer. I'm going to scroll up here and just kind of make sure that we're getting all the legitimate questions. Yeah, so I threw out my stock buys today. Morgan Stanley, I added to my position in J&J. I got lucky. I reduced the position at 146. So I wasn't kidding when I said I got lucky. That's just a lucky move. I was looking to shore up some cash. Johnson & Johnson had run up. I was up big in the position. I was up maybe $800 or $900 in the position when I took a few shares back on it. Liquidated down to 11 shares, actually. I had every intention of adding more to the healthcare sector SPDR ETF, and that's exactly what I did today. But I couldn't pass up on the opportunity to grab a few more of those shares back in Johnson & Johnson. And sometimes that happens for you. You know, that opportunistic buying can really help you. And just sometimes you get lucky. There's nothing that I did that would have forecast a 10% drop in J&J, but I did take advantage of the opportunity. It's one of my favorite healthcare stocks. I know Lydia, you know, is into AbbVie. AbbVie's also a wonderful company, and then of course Merck and Pfizer. Those are the big ones. And I'm in Medtronic. You guys know that. And I know, you know, Lydia doesn't invest in J&J for some personal reasons, and that's a good enough reason for me not to invest in a stock. That's a cool thing about investing. Is, you know, if the company does something that you may agree or disagree with, or if it's something to where you don't think they're taking enough stewardship for their customers, you can just not invest in the company. And I'm all about that. You have to resonate with the company that you invest in. That's honestly what makes it fun, really. I know Philip Morris and Altria and the British Tobacco Company were thrown in the group here as well. But certainly if you have your moral obligation or moral disagreement with tobacco smoking, obviously, that could be a reason enough not to invest in the stock. You know, I will tell you from a stock perspective, you know, that type of thing really shouldn't matter, but it can. It certainly can. And I'm not going to tell you to invest in a stock if it's something that you don't believe in the product. So certainly that'll probably drum up some conversation in the group here. It kind of already did prior to the 9 o'clock start time. That I do appreciate. Good evening, Ryan and group. Ryan, maybe this is an idea for a video. So if you guys have these video ideas, don't hesitate to throw them my way. I do the very, very best I can. I'll be sitting on my couch and come up with an idea. And I'm pretty good at taking it from an idea to YouTube in about an hour and a half. That's about how quickly I can put an upload on there. I've moved away from some of the fancy editing. It just takes too much time. And honestly, it just means more to me to put the message out there. And if somebody doesn't want to sit through a 10 or 15 minute message, then I don't want them on the channel. I don't. If they don't have the patience for it, I don't want them on the channel. That's totally fine. I've never asked for payment on the Independent Investor channel. What I have asked for is creative control. And that's what I'll insist on keeping for myself. If I don't want to download a video, I won't do it. And you guys will see that the schedule is somewhat sporadic. And that's the way I kind of like it. This is really the only consistent piece on the channel, which is good. If you know that this hour is coming every Friday at 9 o'clock, you can kind of look forward to it and schedule it. But as far as the upload schedule, I don't do 2 videos guaranteed per week. I don't do that crap. I don't have time to do that. I can't promise. Not only that, but it starts to degrade from the quality of your content when you start to have an obligation to your community to just post crap to post crap. And I'm very disappointed in the YouTube landscape right now. And that's a lot of the reason why I come out with some of the videos that I do. The one that I released this week with regard to seeking the truth, I threw that out there as kind of an experiment a little bit. It was actually well received in the community. I was surprised. I didn't think it was one of my best videos. As a matter of fact, I wasn't very proud of it at all. However, there was a root to that video that I was proud of. I just wasn't sure if I delivered the message good enough to get how important I feel that it is to seek out the truth. It's not good enough just to come on to a financial channel and just talk about things that when people take the information and deploy it, it's not providing positive results, okay? And I do this for myself. It produces positive results for myself. Is it possible to scale that information and push it through a conduit like YouTube to, we've got 65 people in the group. Guys, I couldn't talk to 65 people about finances in a given day, right? This is just a random Friday where we're doing our open dialogue live stream. And that's a beautiful thing for me. It really is. But if there's information, and we will continue to craft and polish our message, because I'm still not satisfied, and I probably won't ever be satisfied with regard to how each and every recipient of the message takes, understands, internalizes, deploys, and most importantly, succeeds at the message that they take. I'm very, very critical of myself in that quest to do that. Because if I thought for a second that the information was being misinterpreted, and with money, it's easy. It's easy to be misinterpreted, to take and deployed, and maybe indirectly cause somebody some harm financially. And that's not what we want to do. Obviously, this is a YouTube channel. Honestly, this is my opinion, and it is just that in its core sense. But it is a fact that I do this stuff. So I don't mind pushing out what it is that I do and how some of the strategies that I use and deploy can perhaps help you guys in your life. And we'll get to the good, bad, and the ugly. I really want you guys to hear my piece on that as well. But with regard to the YouTube landscape, I'm disappointed. I'm happy about the Independent Investor channel. I'd like to see it grow a little bit faster, but I think in due time, I think we'll be where we need to be. Not Las Vegas, but that's where we will be when we get to that impasse for sure. I'm looking forward to that. But thank you, Mike. I appreciate those ideas when they come through the group. I do have Lydia in the group, so certainly if you have questions for her, she just surpassed her 1,000 subscriber milestone, probably quicker than I did. So certainly if you are just now joining the group, you can kick over there and support her channel. That's awesome. That's coming from the mouth of a creator. See, now I've got some pull. See, now I've got some pull now that I've got 10,000 subscribers. I can say, go over there and subscribe to that channel without fear of repercussion from YouTube, because I'm not kidding about those 30 or 40 subscribers. They vanished today. And I assume it was because of that house cleaning initiative by YouTube. So quite interesting stuff. So you guys are talking about J&J here in the group. That's fine. Wow, I see it in the low 120 soon. What else did it get? I picked up J&J today. I'm long on my core shares. I obviously parlayed some profit to make some room for some of those ETFs. That was fine. The stock market is just violent as hell right now, but my portfolio is really not taking that much of a turn. And this is the defensive strategy that I really want you guys to have visibility on. If we can come on here, and we're not going to talk about magic stocks. We're not going to talk about a magic portfolio makeup that's going to make you alpha every single day. And especially in a market like today, there was no place to hide. All 11 sectors were down today. So there was no place to hide in today's stock market. All right. So I'm just not one of those guys that believe in that stuff. I believe that the folks that get in and they have success doing some of this ugly business over here, you know, they're anomalies. They are. And I think it's even more impossible to scale that, you know, because I know there's people in the independent investor community who are not going to have the same passion as me. That doesn't mean that you can't be more successful than me. If you have a willingness to learn and a willingness to listen and pay particular attention to how some of my aggressiveness has actually been my downfall in my investing career, then you can profit from that. You really can. But you have to pay attention. And again, you're probably not going to get it in a couple minutes if you just tune into the message and shut the message off. It's not going to be any value to you. Again, that's fine if you're looking for some level of entertainment on YouTube. You're probably, I mean, I can crack a joke every now and then, but for the most part, I'm not that charismatic of a guy, but I'm a very happy, secure, and sincere fella, and I love investing. I really do, and I'm glad to be with you guys this evening. So the topic of sin stocks came up tonight. Stars Constellation Brands did not get mentioned. And if you guys want to talk about, the exposure there to the cannabis industry, right? That's one of the intriguing names. You guys did mention Altria already and Philip Morris, both good plays. Somebody asked me why Philip Morris is one of my favorites. If you guys have ever been to Europe or ever walked the streets of Paris, and I don't mean to, I know there's turmoil going on right there, but when all is well and people are sitting at the restaurant, some of the most beautiful people are just sitting there smoking away, man. It's amazing. And I don't do that. I think it's terrible for you. If there's anybody in the group that does smoke, you know it as well. I used to, and I quit. So don't think I'm judging, because I used to be there. It's one of the most difficult things I ever did was get rid of that stuff. But as far as a stock perspective, Philip Morris, man, I remember it was up around 115, 117. Here it is. I think it's sub 80 right now. Correct me if I'm wrong. I haven't noticed that stock over the last couple weeks, if it's floated above 80 or below 80 right now. And I'm not going to check it during a live stream, but certainly just a great name if you want exposure to that sector. Something was mentioned in the community here about the vape industry. And that's actually intriguing to me. I know that's becoming very, very popular. And if you want to be on the front side of kind of a movement to folks that are going more to chemicalless products and just nicotine-based vapor products, I have a lot of friends that do that instead. And that's probably a wave of a paradigm shift in traditional smoking that you might want to be on. So Philip Morris and Altria have been mentioned here in the group. So really good stuff. So I've got the top chat going on here. Let me switch this to live chat and make sure that I'm getting all my questions. Fantastic. I've got everybody in the group here. I don't know why this thing defaults to top chat. I do apologize for that. I'm going to scroll back up here and roll this again. I don't know why. This is a new feature here. And I'm going to have to boost my internet connection to actually do the OBS live stream. That's going to be really cool. That's coming on the Independent Investor channel. That's just a given. I'm not going to be doing live streams from my living room. The channel's not going anywhere. Independent Investor channel is going to be around for the life of me. I'm not kidding. And hopefully when I build my house someday, I told you guys I'm going to build a YouTube studio. It's going to be one of the top things on my list that I demand, because I just love it so much. And I do envision actually doing live calls. That's what I do want to do. That's where I envision really seeing the channel going. That would be really fun for me, is to take a live, uncensored call. I don't need to script crap. I'm not reading off a teleprompter like the world that we live in. All of this is coming right straight from my noggin. You can tell I'm not looking at notes. That's because my attention is really on you guys, quite honestly. And that's where I tend to keep the focus of the channel. I do have Les Gibson on the line here. Hey, Ryan, hope the family is well. Rose and I wish you a happy holiday, a blessed life. We love you always. Hey, man, I can't argue with that. I hope she's watching right now. Tell her hello for me. It's so awesome to work with you kind folks. I'll tell you, you would have never ever known, or had any idea probably about the portfolio, that we talked through. And I hope you're still happy with that. We built that thing to stand the test of time. We really did. And, stocks are just volatile right now. They're just cranky. And when I think about, talking about portfolio options with folks, it's interesting, because I always pose the question, what if? What if we have a 10% downturn? Are you willing to own your stocks that you have on a 10% or 20% downturn? And if you can't honestly answer that, you might want to reevaluate your strategy and your tolerance. But you guys are solid. You really are. Merry Christmas to you guys too. It's awesome to have you guys in the group, man. Just as good as any of a thing to do on a Friday night for an hour out of your time. Like I said, I typically don't prepare for these live streams. I don't need to, okay? If you guys want me to blah, blah, blah about investing all night, I can do that. But I typically really try to focus in on providing that transparency and open opportunity for the folks of the community. And hopefully it gains a little steam. Nobody does YouTube like this. I've been told there's a lot of folks who actually really enjoy this live stream opportunity, really enjoy it. It's my favorite thing to do. Filming YouTube is kind of a one-way shot. I do enjoy filming YouTube videos, but there's a little bit more structure that goes into that. Whereas the live stream, I can come on and actually be myself a little bit more with you guys and actually converse with the community, which is actually what I really enjoy doing that. Mike Lowry, hello, Ryan. Thanks for another great content. J&J, now a good time to buy, 10% decrease. Well, I mean, it would have been a good time to buy yesterday. I tell you what, if anything about single stock ownership has taught you in the short time, or if the time you've been investing, it can teach you that any stock, and no stock is immune to the stock market. It may seem like that. It didn't seem like that long ago where we turned on, you know, CNBC and we were watching Netflix and Nvidia and Google and Amazon and Facebook go up every single day. All right. You look at opportunities or situations like General Electric, you know, that's just getting demolished. Had kind of a turn for the good yesterday with regard to the analyst that's been very, very down on the stock. But it just kind of teaches you, and this is what I was talking about, and this is really why I put single stock ownership in the bad column. And I don't typically mean that. It can be very bad if it's in the wrong portfolio, if you don't have other existing holdings that can help supplement or buffer those individual stock holdings. Very, very important to understand that. But I do think it's a buy. I bought today. I think I picked up 10 shares. Nothing crazy. I had the 11 in partial shares. So I went ahead and beefed up another 10 shares. That's what I did today. That doesn't mean that you have to go out and buy the stock tomorrow. But I'm long those core shares. And if it had remained in the 140s, I wouldn't have bought. But I just saw an opportunity down $14 today and decided to pick. I was in a buying mood today. I had short up $40,000 over the last couple weeks or week and a half or so, probably a week and a half. I've short up 40 grand, taken profits in some of the names that I was up in every single one of them, put that cash to the side, and then just waited. All right. Now I haven't invested all of it, but hardly. I invested about 25% of that available capital within the investment portfolio today. And I'm holding the rest on the side as well. Now that doesn't have anything to do with my cash on the side. That has everything to do with my standing cash in my portfolio. And I don't want you guys to think about this as, why is Ryan telling us, you know, I want you to look at it from this perspective. This is what is possible, right? This is what's possible. When you start and you have less than $25,000 to a portfolio, you're typically just funding and watching your money fluctuate up and down, okay? The option to take profits and put those profits aside and buy stock with your profits, those don't seem as apparent when you have 25,000 in cash, but or 25,000 in a total portfolio value. But I'm telling you, if you stay on your program, those are the types of goals that you should know are possible in investing. And it's so difficult when you start to say, gosh, Ryan just bought these 6 stocks today or 5. How the hell does he do it? Right? Because I'm not buying it with new cash. I'm doing it because I've generated a money monster, basically, to where I've got portions of the portfolio right now that aren't working, portions of the portfolio that are remaining stagnant or turning the corner, right? My fixed equities, for example. And then I've got other sections of the portfolio that were performing quite nicely. And it's a product of the diversification and the allocation. Those two things put together correctly can provide that income generating. I have dividends thrown at me all the time I don't even look at when I'm throwing a dividend anymore, because it happens so frequently, because there's so many stocks in the portfolio that you just kind of get used to that money machine. And you notice just over a while, a stock will grow, and it'll grow without you sitting there watching it every day, because when you've got those smaller portfolios, it cuts a little bit deeper, right? Because those are dollars that you've earned, contributed, and you haven't gained any of that compounding interest yet. So it becomes much more evident when your stock portfolio enters into some volatility here, and that 25,000 turns into 21,000, and you're like, Jesus, I'm down $4,000 of real money. You know what I mean? Do you guys think for a second I'm down real money right now? I'm down house money. That's it. And that's what makes it easier. But you've got to get through those beginning transitional periods where the compounding effect is not going to be as evident. As a matter of fact, if you're looking for that validation when you're first starting, it's not going to be there immediately. But hopefully what you get from me, I don't want to use hope. I don't. I want you to know what will be possible if you stay the course. That's it. It's really all you got to do is just stay the course. And you guys will be there too, because make no mistake, I'm not coming out with the Independent Investor channel to screw around and have people just invest up to 10,000 and stop. I'm looking to have you invest to 10, and then to 25, and then to 50, and then to 6 figures, and then to $250,000 and $500,000 and beyond. That's what we're aiming for. Now, am I guaranteeing you that you get there? No, I'm a realist. I'm sorry. And I like talking, I look for this type of pessimism from other YouTube creators sometimes, and I very rarely see it. I very rarely see, hey, here's what's possible in the stock market. Yes, but you have to understand that, you can go through bad times as well, right? And I'm just like, the volatility has been here for the last couple months, and this is way more indicative about what the stock market has to offer holistically. Honestly, before this volatility kicked in, especially even 2018, because 2018 really has not been that good of a year in the stock market. There's been strategic buying opportunities. There's been some opportunities to make money like I have, manufacturing money in my portfolio. I've had to work for my money. If I'm up 6-7% on a position, boom, I'm out. And I'm rolling that money into new opportunities. So you guys, if you listen carefully to what I'm saying about the possibility, right? That's why I harmonized with First Trade, because I could care less about a $50 referral fee, right? Now that is a nice kickback, all right? It really is, because I'm spending my time to research a product and honestly put my name behind that product. And it's the only product that I back through an affiliate program. I removed the Amazon crap from my channel. I thought it was a waste of time, and I thought it degraded from the integrity of the channel. First Trade is different because it'll give you guys that opportunity to become passive to start. And then if you wanted to take some of those opportunities down the line and have those opportunities to enter into a stock and maybe liquidate a stock over the course of maybe one day or a week or a month, you can do that, and you can do it free of charge. That's a solution that makes sense to me every single time and twice on Sunday for you guys. And I did not hesitate at all. When the opportunity was brought to me about a month and a half ago, I actually went on there and tried to start it right away because I knew how good it was. But it wasn't until I actually got on the platform here recently where I came out with the First Trade video and pushed that out there for you guys. And I'm glad to do it. I'm more interested in being able to say to folks who come to me and say, I don't want to incur those $7 entry and exit fees anymore. And now we have a great solution to put those folks into, or at least recommend to people to look at as a very, very viable option. And I'm playing my cards a little bit on investing that capital. I'll have you guys know it is a margin account now, just for your awareness. It is a margin account for the reasons I've already explained to you. So I can trade in and out of stock within a matter of, a few minutes if I want to. I can reallocate settled money. I don't have to wait until the money actually settles within the account, because I've had a free writing restriction on my Merrill Edge account ever since I've owned it. They haven't taken it off yet. So I don't know what their problem is. I've told them, they call me once a year or once every 6 months and ask how, my opinion is of Merrill Edge and do a review, blah, blah. And I tell them all the time, I'm like, I don't even know why you guys allow a trade to go through that's going to subject somebody to a free writing restriction, but it does. And it's cleaned up a little bit too. The platform really has. Really good to have you guys in the group, man. I'm on a roll tonight. Man, don't hesitate to throw your questions at me, man. You're going to get a brutally honest answer tonight, man. We're 35 minutes into it. So I'm fired up tonight, man. This is very cool. Banks getting crazy low makes no sense at all to me. Me either. It's crazy. I had to pick up Morgan Stanley. I obviously own Citigroup. I own JP Morgan. I liquidated Wells Fargo just to hedge the financial position. I didn't really want to sell Wells Fargo, to be honest with you, but Morgan Stanley just looked very, very attractive today. I looked at it. I did a quick review of it and picked up 80 shares of the stock right here, sub 39. And it may very well be a doubler. If things need to shake loose in the financial institution, they do. But I'm willing to go long Morgan Stanley. It's one of those that can be a financial cornerstone in the portfolio, and we'll take a shot. We'll take a shot. It doesn't mean I'm going to win, but at $39 a share for Morgan Stanley, I'm in. Sign me up. I'm good. I've taken lots and lots of shots in my life, and I've lost on some of them, but I've won on a lot of them as well. A lot. As a matter of fact, and this is the God's honest truth, I win on most of my positions. Why? Because I have a very simple rule. Don't sell in the red. Don't sell in the red. I'm willing to take a stock into a brutal downturn because I know that the decision that I make when I use my best instinct to enter into a stock will come through at some point in the position. And I know I've got diversification. And if you rely on those principal strategies, you're not going to push a button and initiate your diversification. It doesn't work that way, right? You build diversification in before you invest the dollars, right? You put it into the strategic plan, and then it works for you automatically. All right. It's one of those auto calibration tools within a portfolio. It's just a beautiful thing. But I want to get back to the group here and see where we are. Robinhood got a shot kicking today. Mr. Doug Whitaker's in the group. Welcome to you. Again, I don't want to steal Lydia's thunder. I'd be interested to see what she has to say about that, what she's doing about that. We had a half a dozen YouTube channels come out with it. Graham took it for action. Of course, Jeremy, he's, I don't want to speak bad about Jeremy, but he obviously came out with a message just like everybody else. And then there was a few other channels that offered it as well. I know Jake came out with a video. Lydia came out with a video. So interesting enough, I have my reservations. I've always had my reservation about Robinhood because I just think it's probably put a cool product in the hands of a lot of people. Unfortunately, it's been at the expense of the order that I insist upon in investing in a retirement account first and maxing out those contributions. And if you're maxing those contributions, I mean, you've got $6,000 for 2019. If you're not max contributing your Roth and have the opportunity to do that for multiple years, then you don't really have any business or need to have a taxable individual account or a taxable joint brokerage account. You don't need one. That's just my opinion. That's just the way I feel about it. And hopefully you guys can benefit from that opinion, man. We've got 80 folks making their way into the group tonight. I'd like to cap 100 if it's possible. I don't know if it's, see, now we just dropped below 80. See, I talked and YouTube scrubbing my people. I saw it today and I was like, wow, okay, that's not too bad. I thought for a second we were going to go back to like 5,000 subscribers because I thought, man, I really hope these 10,000 subscribers are all loyal, legitimate people. I was like, geez, what you earmarking my channel for? But evidently it was YouTube wide that we're getting scrubbed on. So no big deal, no big deal at all. I want loyalty in the group anyway, man. I'm loyal to you. And I think asking the community to be loyal at 50%, I don't think that's too much of an ask, to be honest with you. I've got Bill Williams in the group here, David Mathis, man, in the group. Good to see you guys, certainly. Investing wisely, man. Awesome. Good to see you. Always want to throw out those channel creators, man. Certainly appreciate your support of the message, man, over time. Really, really appreciate it, man. Hopefully we're growing the community correctly. I'd like to see more people make their way into YouTube. Honestly, I have a vision, and it's not happening on YouTube, because I think, unfortunately, so much information is so misleading that it's saturated. I'm sorry. It's saturated, and you can tell me I'm wrong all day. I'm not wrong. There's so much opportunity to make so much money on YouTube. So that's the driver. That's the money motivator. And it's a money motivator for a lot of kids. And I hate to be condescending. I hate to. I used to be one. All right. I went through that. All right. But you cannot have the level of experience in the stock market at 21 years old like you profess on YouTube. All right. And again, for those folks that have done penny stock investing and they've succeeded at it, I'm all about that. But keep it to yourself. Okay. Because you're probably doing more harm by coming onto a platform like YouTube and just selling a product to people. You're probably hurting people, honestly. And I hope you realize it. I hope you're able to look in the mirror and be like, wow, I'm really not contributing anything worthwhile to society. I'm actually hurting people. I should probably just shut my trap and go on with my existence and drive my Ferrari and leave people alone. Honestly, if you guys want to know my honest opinion about the landscape of YouTube, I'm typically fairly disappointed about a lot of, there's a few that I love them and I'll back them. But there's, tenfold, a ton of channels out there probably doing a hell of a lot more damage than they are positive for people. And that's just my opinion. I could be wrong. It could be the cynic in me, but I don't think I am. And I don't think I'm the only one who feels that way either. Ryan, what do you think of Robinhood's announcements? I'm going to defer there to Lydia, but I'm going to kick down. I got John Michael Haas in the group here. I was wondering if it was a good idea to take some money out of my taxable. Yeah, so you hit me up and I invited you into the live stream. I think sometimes the most prudent move when you're thinking about moving a position from a taxable account, and what I asked you initially was worth asking, is that have you held the holdings in the brokerage account or the taxable account for under a year or over a year? Okay, if it's over a year, you obviously have the opportunity to be subject to long-term capital gains. Lower tax brackets, both of them, can enjoy tax-free capital gains on long-term holdings. So you could get out of those positions and not have to pay any tax on that. That would free up some money to help you if you needed to shift some of that money over into the Roth IRA. Now, I'm a crazy mind, and I remember what you had said about a couple things. I believe you have a spouse, okay? So there's double the Roth IRA capability there, all right? So it may justify that move even more because you need more than just the $6,000 of capital necessary for 2019, right? So you might have to double that to 12,000. So you're not speaking specific numbers, but my answer to you applies regardless of whatever numbers you're talking about, okay? And my other understanding from our conversation is that you were talking about the prospect of saving for a down payment on a house. And I think we were talking about, investing some capital, getting some returns, and then using that money for a down payment on a house. I'm not an advocate of that. I'm not. I think if you want to save for a down payment on a house, then you earmark those savings in a savings account to be just that and go with it. Don't try to mix the two together. I see this mistake all the time, and you end up investing $10,000 thinking that you're going to make 15,000 on that 10,000, and it ends up adjusting back to 7,200. And you're like, wow, I really didn't want that for that money, but it was an unintended consequence of putting that money in the wrong bucket, right? And misallocating the goal for that money. So a lot of different things going on with your question. I think it's an okay idea, all right? But again, without talking specifics, I mean, you might be talking about a brokerage account or a taxable account with $50,000, right? So you might have some long positions in there to where you skim off some of the white meat and you're good to go. You can shift some of that money over to the taxable account, or excuse me, the Roth IRA, and you're good to go. It may be that your brokerage account only has $2,000 in it, and those positions you've owned for 3 months. So now those are short positions, and the question becomes, do you want to take those withdrawals out of that taxable account, liquidate those positions, pay short-term capital gains on those as earnings, which isn't the end of the world. People think it's like, oh my God, I got to pay taxes. I do it all the time. I short trade in my brokerage account. I can fear not. Who cares? Claim it at the end of the year. It's income. And last year I was able to generate $10,000 of just white meat in my brokerage account. Okay. And it was worth it. Okay. It was worth it. So don't fear it. It's just, you're going to get my best effort in explaining what your options are in respect to the holdings that you have, the amount of money you're kicking around there. But I will leave you with this. And I'm so glad that you addressed the comment in the live stream, because I can tell you what, man, this is the next best thing from just sitting across the dinner table or sitting across you guys at a restaurant and just talking to you, because I'd be doing the same thing that I'm doing through this live stream that I'm doing for you now. And I don't have to write it all in an email. Okay. So that helps me out a ton. So for that, I thank you. It makes it so much easier to put my explanation to you just out there for your benefit. But I will say this, if you're looking for performance out of this particular stock market, you might be 9 years behind the 8 ball, okay? You might be looking at trying to gain some appreciation in the later innings of an extended bull market. And I'm not saying this bull market is going to end next year or the year after. What I'm saying is, I think we are probably most likely in the later cycle of this bull market. That's just a practical application, okay? That has nothing to do with anything fundamental, because if we were in a 30 or 40% recessed extended bear market, and I said, now's the time to invest, you would think I'm just as crazy. You would. It's so much more difficult to make that call when the stock market is off 30 or 40%, when everybody's talking about, everything going to hell in a handbasket. It's very, very difficult to get people to realize that in fact is the time to get into the market when everything else is washed out. Why do I explain this to you? I think now is the time that if you wanted to throttle back on your investments, you could do that. What I mean by that is, if you're investing full throttle, $500 a month into your Roth IRA, and you wanted to cut that back a little bit and put $250 toward that down payment on that house, now is the time to do that. Now is, right? And you're not hurting yourself. You're just reallocating that dollars to something that you and your spouse or your wife or your girlfriend, whatever it was, I can't remember what you had said to me, whatever it is that you guys are working toward together and what it is that you value. That's extremely important. It's probably way more important than seeking out some sort of appreciation in the stock market. Because if I were to extract what it is that you were really asking me, it was to combine your efforts and pull from some investments over here to feed this investment over here, and potentially maybe use this investment to fund the down payment on the house. And my recommendation to you is, try to keep them as separate as you can and look at each individual entity and exploit the benefits of each and every one of those entities. Don't mix them. So, John, thanks for coming in the group. Thanks for readdressing the question within the group. I think there might be some folks that heard something from my explanation that can potentially benefit from it as well. So thank you. I hope that answered your question, man. Please just give me a thumbs up to let me know if you've got any amplifying questions. I'm not going anywhere. I'm sitting in my living room. You guys aren't. So I'm on your time. So, so nice. Thank you for the question. Robert, thank you. He says he checked in and liked it. I don't know. There's 71 people. There's 73 people in right here and 31 thumbs up. That's kind of funny. Like, I don't know if those people are waiting and they're like, this guy's got to say something to sell me on, man. This guy's got to say something to earn that thumbs up. So, no, I'm just kidding. So I don't understand most of that stuff on YouTube. I don't even know what it does for the channel, to be honest with you. They just said, here you go, buy this camera and film yourself and go on and talk to people. And you might gain subscribers within 10 or 20 years. I don't know. We got there in less than one. So I'm stoked about that, man. Just couldn't be more stoked. It's a lot of fun, on the channel, a lot of fun to meet folks that I would have never met had I not had the social media interaction. It's just a lot. It's very cool. Very cool. I enjoy the heck out of it. Still seems like they should do a better thing of rising rates. Robinhood is risky, not FDIC insured. Yeah, I mean, no brokerage account is. That's so people really need to understand that. The bulk of my money is with a brokerage house that's not FDIC insured. And ultimately, when you're rounding third base and you're heading toward home, what I tell people, the ultimate win for me is to have $249,000 in multiple savings accounts. Honestly, I mean, what loyalty do you have to the stock market to continually ride the stock market and keep the level of exposure the same throughout your life? Your level of exposure should actually change as you get older. You should be looking to de-lever risk as you get older in your life, okay? And, de-levering to me is actually in a savings account. That's about as safe as I can say. And a lot of people have got a lot of different opinions in the community that would say, I value having, cash on hand at home and is safe. And that may be true. Is this safe fireproof? Does it not introduce you to be a target? Most people that I know that have that type of money in their home have already admitted it to me. And I'm just like, if it were me, I wouldn't admit it to anybody. But it's human nature to want to talk about that stuff. And I can throw gold and silver and precious metals into that conversation as well, in that you have an obligation to safeguard that stuff. So I think that's interesting. And, my big knock on Robinhood, that's a great point. It's not FDIC insured. But my thing about Robinhood, again, is with the non-retirement accounts. And I've had those brokerage accounts too, man. And it's just my opinion. What is it worth? I've been doing this a long, long time. And I just think for the thousands and thousands of people out there that got attracted to Robinhood for one real reason, let's be real. And a lot of people got the app and they enjoy using the app, etc., right? But they got the app for free trades, okay? You cannot tell me that those thousands and thousands of customers actually thought for a second, should I be investing in a retirement account or should I be investing in a taxable brokerage account first? You can't tell me that line of thinking occurred. And that's my problem, that's my problem. Somebody says I'm still subscribed. Guess I'm not a scam. Good to know. Yeah, I was surprised. I hadn't heard anything. They didn't email anything. It was a note inside my YouTube creator, and it said, "Hey, during the 13th and 14th, we're going to be scrubbing accounts." And I guess it was just a lot of foul play on YouTube with buying subscribers, I guess, and I thought the sub for sub thing was kind of trivial because it does take somebody to say, to go on your channel and say, I'll sub to you or you sub to me, whatever it was. But evidently that's illegal. I don't know how you catch that, to be honest with you. But yeah, we lost a few. But I'm glad to still have you in the group, Chester, man. Hold tight, man. We're going to be around for years and years. We're not going anywhere. So I would just ask for you to continue your loyal followership, and make sure you're being greedy on the information. Take whatever you need, no doubt about it. You guys get my best effort. I'm tired at the end of these live streams, man. It takes a lot to sit here and talk straight for an hour and a half. If you think it's not, try it once. It's interesting. Set up a fake live stream in your bathroom and just talk to the mirror for an hour and a half. It's a tough thing to do, but I love doing it because the topic is right in our wheelhouse on the Independent Investor channel, no doubt about it. And the loyalty, man, it's great. You know, I'm humbled by it, and I'm so proud. I'm so proud to have such a loyal following. There's so many cool people from all over the world that join the group. I mean, there's 100 people in the live stream. By the time these live streams go live in about a week and a half, it's got 1,000 views. So it just kind of tell you the power of the message and the power of some of these themes that we're putting out there, you know, and freaking discussing and not shying away from. I get so sick and tired of the financial topic being one of those things that is discouraged to talk about. Now, politics, for good reason, great. Money, I don't put in that. I don't put personal finance in the same topic as politics, which politics I do agree with. I do agree with it. I don't like talking about it. It always ends up in an argument, so why talk about it? Finances can really, really help people. And at the end of the day, a lot of people out there, whether or not they like to admit it or not, are very, very interested in improving their situation, no matter what it is, no matter what their background, no matter what their level of employment, no matter what their level of education is. None of that stuff matters when you go to measure the success of an investor. None of it matters. You can succeed in the stock market if you want to. It's that simple. There's no prerequisite. There's no experience necessary. There really isn't. There is a willingness to start with no experience, and there should be a willingness to evolve and a willingness to stay the course. That's the important part, because I talk to folks all the time that are just fired up. They get in and they fall on their face and they're done. It happens. It happens. So you really have to be willing to stay the course with investing, and let some of those validations come. You're not going to get them all at the same time. You know, investing will prove to you over time that it's something that's very rewarding. Okay. And it will also test your level of loyalness to the stock market as well. Make no mistake, I'm here to give you that real talk. All right. There's going to be times where you ask yourself, what in the hell am I doing with my life? This is crazy, right? Crazy is an emotion, all right? And I know some of the people heard me when I talked about becoming mechanical on the stock market. That's extremely important to approach it free of emotion, because if you're going to engage in the stock market, this is coming straight from Warren Buffett, the stock market doesn't care how much you wish your investments to go up. It doesn't care. It's going to go where it is that it's going to go, and that's final. It's final. There's nothing you can do to lose sleep over, or to worry about, or to panic yourself out of, or seek out certain YouTube channels to save you from yourself. That's the truth. So what do? Is there hope? The hope is to separate in your mind the good, the bad, and the ugly. Put on your side all the things that are good that you can control. I've got the list of, DCA, DRIP, the power of information, tax protection, fee reduction, diversification, time, and allocation. Every single one of those tools, and I'm going to be coming out with a video tomorrow about avoiding gaps and overlaps. That's just another tool that you put in your tool bag. The rule of 72. You guys are going to want to catch that, because I throw it out there in 7 minutes for all my millennials in the group, man, that can't stay with me for 14 minutes on a video. I came out with a 7-minute video just for you guys. The rule of 72, just another tool for your tool bag that you want to put away, and you put into this column of stuff that you can actually control, right? And what you want to try to do is, of course, just avoid some of these things. We talk about them all the time. Now, the ugly stuff, that is easy up in these two categories. You know, a lot of folks in my community, man, they're teachers, firefighters, you know, law enforcement, military, etc. That would love to think that every one of my 10,000 subscribers are good people. Okay, they're good people. Let's just say for a second, it's a utilitarian society and everybody's perfect. All right. I would like to say that these two things are easily avoidable. Now, the dishonesty and the it's the dishonesty and the you know, the ability to mislead people is the thing that over here is the ugly side of the house. And I think somebody that can be a good person can be easily misled, even though their intentions are good. Like, wow, this person's really charismatic about their investment stock mastery course or whatever it is. They seem believable. I'm going to somehow pay this money to this person, and it's somehow going to mean that I go from here, which is what your self-deprecating idea is, to somehow over here. And my contention is that you can get over here free. Free. You just have to have one word: willingness. That's it. So this stuff over here, you know, kind of easily to avoid. But this is the piece here that I dub one of the biggest downfalls of YouTube. To be honest with you, it's extremely misleading. I know this because I review the comments. I fail to comment on a lot, but the most entertaining thing for me is to go through and read the comments about how seemingly being part of the group, and that was the root of that video that I came out with, was seeking the truth and how important it is. If you're buying into the consensus of the group, that somehow it makes it truth. And I disagree wholeheartedly with that. I disagree. And I think there's a lot of that going on YouTube, and I'm not exempt from it. If there's things that you see that you disagree with, if spider ETF investing is not for you, or you have an article that comes out and Jack Bogle talks about him creating a monster with the ETFs, I want to see that stuff. I want to see those opinions. I want to be challenged on the process. I really do. Because at the end of the day, it's just going to make us stronger. And I've tried to challenge the process on some of those other platforms, and I get run right out the front door. It's honestly, it's like I'm invited to the barbecue and we're standing in the backyard and I say something wrong and everybody's looking at me waiting for me to leave. You know what I'm saying? And it's just like, wow, okay, I'm out of here. You know what I mean? We don't need to have productive thought. I don't agree with what you're saying or what you're doing, so I'm out of here, right? So just kind of my soapbox there about my explanation behind me about what I got, about what you can control in the stock market. I'm still the same number, but small channel, laugh out loud. Now, we're all small channels, no doubt about it. Brent's giving me a shout there. I don't know. I'm happy to meet the milestone. I'm happy. My goal is to reach as many people as I can. If that means 10,000 people and 10,000 people are changed, then I'm all about it. If it means 600,000 people are reached, which isn't that many people in my mind, you know, some of these folks, they act like they own an empire and they've got 250,000 subscribers. That's the size of a small town. Okay. I don't mean to impugn, but that's the reality of it. I'm waiting for some of these YouTube creators to come on to YouTube and forget to take their king's crown off. Honestly, like, oops, oh, I'm sorry. Oh, you weren't supposed to see that. I'm sorry. I was in front of my mirror with my king's crown on. I apologize. You know, it doesn't make you a better person. It doesn't. No way. I don't buy it. Interest rate should be raised on Wednesday. I think it is already priced in. Let's see. I hope so, and I hope they do raise. I think if they do raise, it's going to be a signal of strength in the economy. I'd love to see them continue toward normalization. I could really care less about how every time something gets talked about with regard to the interest rate environments, the stock market goes down 1,000 points. I think that's absurd. I think it's silly. And I'm really tired of watching it happen, but I hope they do raise, and I hope you're right. I do hope that that it's priced in. We will see. It's a very volatile stock market, and it'll be interesting to see something systemic like that not systemic, but at least a headwind be introduced and see how the stock market reacts to it. Because I hope they do. I think Jay Powell's fantastic. I know everybody's piling on, say he's a piece of crap and, he's not doing his job well. I disagree. I disagree wholeheartedly. He was the best person for the job. And I think he's doing wonderful. I think he's looking at all the data. I mean, I can remember in my lifetime when we had interest rates for home mortgages up around 11%, so cry me a river. They're at 3.5 to 4 right now. The prime interest rate is still in kind of a manufactured environment, and we need to be able to sustain a little bit higher interest rates and keep an eye on inflation to make sure that that doesn't get out of control, which it's not. So I hope they raise. That's a smart comment, K9. I appreciate that. We'll see what happens. I don't know. I'm chalking 2018 up as a loss already. I mean, I'm up in my portfolio, but I'm just chalking it up to be like, wow, if something crazy happens over the next 2 weeks in way of an end of the year rally, it'll be some nice relief from the last month and a half or 2 months of pretty violent stock market action. It's a little bit more abnormal than a normal stock market. Certainly. I mean, it was down 500 today. I mean, it's like, Jesus Christ, it's unbelievable. The volatility. It's been interesting to watch. Haven't made a lot of moves in it, not getting crazy. But that's just what we got. So I got Nelson Lee in the group, man. Welcome to you. I'm glad I'm still here. Oh yeah, Lydia, for sure. She's talking about that subscriber scrub. I don't know. It was just yesterday. I looked at it and I was like, wow, 13 to 14. That's one day. Wow. Thanks for the notification. Again, I hope I don't go down to 2,000 subscribers, but I didn't. I lost about 30 or 40, I guess. It's accelerating pretty well, actually. I think when you hit 10,000 subscribers, your channel actually starts to accelerate pretty well. So I'm happy about that. We'll see what happens. Who knows? I don't really wake up in the morning thinking about how many subscribers I have on my YouTube channel. Honestly, I'm looking to put my pants on and go to work, to be honest with you. I've got Mike O in the group here. I added my last POS to my portfolio. My last position portfolio, 37 positions in 5G genetic modification, CRSP, Adidas, nanotech, nice. Chips for quantum computing, 7 dividend aristocrats, and aerospace tech. Thinking long, but that's it. Now got 91 positions. I'd like to know what level of exposure, Mike, that you've got that. What I mean by that is how much money do you have invested in those 91 positions? I can tell you, my friend, I have over 300,000, and they're probably covered over less than 37 positions, less than 37. So if you legitimately have 91 positions, I just want to make sure that you're not watered down. I mean, you could be hitting me up with a 7-figure portfolio there. With the exposure protocols that you're pushing out to me, you should probably have a fairly sizable portfolio. I don't know that to be the case, but a little bit different perspective in how you approach investing. I'm all about the opportunistic investing with looking at emerging technology, nano you've got there. I'm interested in that as well. Quantum computing, things like that, that's great. You're probably doing quite well because it makes sense to you. It sounds like you're well-versed in that particular area of study, and especially investing. If you're willing to put your own money to work there, man, I'm all about it. It's great. Hopefully we can offer some value on the Independent Investor channel. I don't know if you're investing from here domestically or overseas, but some of the strategies and philosophies that we put forward on the channel here, hopefully you're able to use and deploy some of those with regard to how you're building your portfolio. I'm more interested in my fixed equities positions, my dividend aristocrats, of course. I'm very transparent with those holdings. Big tech, obviously, big holders in Amazon, Google, Facebook is a buy right here. For anybody who's ever wanted exposure in Facebook, here's a buy. I'm not really invested in some of those smaller companies. I'd rather just own the underlying small cap ETF, and that's typically how I grab that exposure. And I've got an index fund that does that, and I've got also the Sector Spider ETF for technology, and I've also got, I have three actually. I've got the small cap ETF offered by Vanguard. So that's how I seek my exposure in some of those small tech companies. Technology being my absolute favorite, so I do agree with you there. I've got some other favorites that are actually getting demolished right now. Energy is one of them. It's one of my favorite sectors to invest in. So I own all the big boys there: Chevron, Exxon, Royal Dutch Shell, Marathon Petroleum. I want exposure to both the Permian Basin and liquefied natural gas. So just to give you some idea, that's why I stay away from the sector-specific ETFs there, because I have my exposure through single stock. That's a killer comment, man. I really appreciate you kicking into the group here, man. It sounds like you're smart and savvy. Sometimes smart and savvy doesn't win in the stock market. You know, and I don't mean that to be impugning at all. I just, man, the more times that I try to outsmart or outthink the stock market or think that I've got the next best thing in the stock market, I end up losing, you know? And sometimes some of the best investments are the ones that are right in front of your face. You know? But it's great to have you in the group. Thank you, Mike, that was a well thought out comment. I appreciate that. Sparked up some curiosity on my side anyway. So it's good to have you, man. Thank you. Investing Wisely, K97. You guys are conversing with each other. Matt Meyer, I got in the group here, man. I'm 20 and have maxed out my Roth for the year and have a brokerage account with 27K. Does it make sense to start a traditional IRA? No. Just keep the Roth. I'd like to know what your income is, certainly. Ernest is probably cringing right now that I hit you with that answer. One IRA, I just went through this. I had to get out of my SEP IRA. One of the folks in the community actually helped me with that and said, whoa, Ryan, you're right on the $55,000 per year. But you can't own two IRAs like that. And that was my problem, is even though it was a self-employment IRA, I was against my maximum cap on my two individual accounts that I have, but they're both maxed out. So that made me ineligible to contribute to another IRA account. All right. Now, if you're in the military, okay, it's a little bit different. So I just don't want to tell you carte blanche that you can't, because you can do the Roth TSP for my military folks and an individual Roth IRA. All right, you can do that. But I assume that you're not asking that question, or you haven't declared that you're in the military. And I don't know your income either. If you're 20 years old and you've got 27K in your brokerage account, you're probably pulling in some pretty good greenbacks. So I congratulate you for that, but I would certainly focus on your Roth IRA, $6,000. You know, if you end up getting married or you end up staying single, right, make sure that you can max fund that for years. And then you would actually be a candidate to start investing in your brokerage account, in that taxable account, and starting to establish some of those long-term positions in that brokerage account for yourself. You're done. You're winning the battle. Now, if you end up having the opportunity as well to go with a 401k or something through your employer there, that's another third option for you to channel funds to. I understand that for you guys that make good money, the Roth IRA is an easy thing to fill, and you have to look at other avenues to do just that. You know, you'd be a great candidate for First Trade. And again, I'm an affiliate with the program. They would probably pay me $50 if you transferred over there. But make sure that in your brokerage account, you have the ability to trade for free. All right. That's something that First Trade does offer. I have a taxable account with First Trade, so I'm not recommending that you look at them for any other reason other than I'm very happy with them. They provide that avenue. There's a couple others that come in the group as well. M1, Finance, and Webull. I'm not as big on Webull because I don't like them picking the free stock for me. I'm not a big fan of that. I'd just rather be paid $50 and go on with my business. But Matt, it's really good to have you in the group, man. It sounds like you're doing really well, man. 20 years old. That's sick. You're killing it. You got the ace up your sleeve, man. Just don't get crazy. And you're home free. You are, man. The sky's the limit for you. Don't underestimate the power of that $6,000 per year in that Roth IRA. Do not do that. and make sure that it's a self-directed account. You're good to go. You're going to liberate the account, and those $6,000 are going to be able to grow tax protected and wealth preserved, man, free of fees going forward. That's a key takeaway, man. 20 years old. I always try to focus a little more if you guys come on and declare yourself and say, hey, I'm 20, 21, 22 years old, and I've got this going on. I tend to try to spend a moment just talking to you guys, because sky's the limit for you guys. I would have killed for this information when I was your age, and I'm glad to deliver it. So hopefully that answers your question. So we're going to try to go to minute 20 tonight, guys, if we can. That would help me. I'm starting to lose my voice. I'm starting to lose it. So I'm going to go as long as I can until I fall over. I've got Felipe, I've got Christopher Blaine, and Les right below. Les says, one of my issues is 60 people watching and 17 likes. Oh, man, we're up to 40. See, if you want that short-term validation, Les, you wouldn't be a very good YouTube creator, see, because you've got to deal with negativity and roadblocks and failure all the time, you know? So I just have really tough skin. I don't care. But I do appreciate the support. Absolutely. I wouldn't trade my community for anybody, man. It's very loyal. They know, and it's something that I could resonate with too, is if I came on a channel and understood that somebody was just doing this to do it, you know, and it wasn't a primary means of income, you know, like everybody else gets out on here and it's just like, it's serious business, man. It's not like that for me. It's serious talking about people's money, but the money part to me is easy. It's not that hard. And if nothing else in my life, I've validated that money for a lot of people is far from easy. It's very, very complicated. So if I can bridge the gap for somebody, empower them to be a better investor, I'm all about it. I take that responsibility very seriously, but I also do have a little bit of fun with it, because why not? Why not? It's a fun topic. It's a fun topic getting fiscally correct. It's fun getting your finances in line. It's fun looking at your portfolio and knowing that the plan that you put in place was the right one. It's great. There's no other feeling like it, man. It's awesome. You work really, really hard up front to get things right, only to make things easier going forward. Remember what I said about trading on house money? That's legit. That's legit. That's what I did today. Yeah, a lot of fun. A lot of fun. I just want that for you guys as well, and it is possible, no doubt. Let me continue to scroll through here and hit some of these. I got Jared Odell here. I bought emoji. He was doing buying like me. That's pretty funny. Great minds think alike. That's pretty awesome. YVIG and VYM, and you can hit me up in the Facebook group if you want, but I'm just curious as to that VIG VYM purchase together. He says he went quick Christmas shopping. I bought 30 shares of Apple. I'd be interested to know what kind of position you took in it. I put the buy-in order at 30 and didn't change it, actually. I think it was about $5,000 worth of stock today in just Apple. But I'd be interested to know. I'm trying, Jared, and I'm speaking with one of my just best friends of the channel, no doubt about it. Just a light in the channel, guy's just a warrior. But I'd be interested to know, because the video that I came out with for tomorrow, and you guys, again, the transparency and visibility of the live stream, you guys benefit from knowing those behind the scenes things. I throw them out there because it's not a secret. I could care less. But I'm really talking about the gaps and the overlaps in the account. And I would just be curious to know the similarity between the VIG and the VYM. If I'm mixing my ticker symbols up, please forgive me. But I'd like to know what your thought was on buying both of those together in the same portfolio. It'd be kind of like buying VOO and VTI in the same. And we struggle sometimes, because I know you're in there at the Facebook group helping me build portfolios from scratch for a lot of people. And I really want to get across. I don't know if it was something that I said. I know I recommend both stocks, or both ETFs, VTI and VOO, respectfully, but you can own VTI exclusively, because that's the entire stock market. You know, the VOO, you'll probably have to supplement and add a little bit of exposure to some small cap to cover the entire US stock market. The S&P 500 covers about 81%. of the US stock market on the large cap side, and the remaining 19% is on the small cap capitalization above $1 billion of market cap companies. So hit me up in the Facebook group. Certainly, I'd like to strike up a dialogue with you and just get your thoughts on that as to why you did that. I wouldn't have. I think VYM is a good enough standalone product in the portfolio. I think VIG is the same. I think you could have used VIG as a standalone product if I'm thinking about those, because those are both dividend-paying ETFs, if I'm not mistaken. Please correct me if I'm wrong. It's been a long day. It's great to see you here, Jared. Thank you so much, and just thank you to you, man, for all the help. The group, man, wouldn't be the same without you, man. I just appreciate all your efforts, man. Thank you. It's awesome. J&J is susceptible to future lawsuits from admittance today. I would wait. Could be wrong. No, you could be right. Absolutely. Absolutely. I just got lucky on the move. So I'm looking to buy a dip, and if it continues down, you know, so be it. I've owned J&J all the way down to $69 a share. So that's the range of discipline that I have with a company like J&J. It's that simple. I don't care. You know, I don't own a huge position of it. It's probably 2 or 3% of my total overall portfolio. And I've been backfeeding the healthcare sector spider ETF with the profits that I made from J&J. So you guys see the method to my madness. You see how the world goes around a little bit. And that's just part of the thinking. It was too much of an opportunistic buy. Typically things like that are overblown. When lawsuits start to take, it could affect the stock. You could be absolutely right. But there's nothing wrong with monitoring it, you know, monitoring it. If it comes off another 20 bits from here and you wanted to own J&J in the portfolio, you might have an excuse to actually pick up the shares. I've got Travis in the group here, man. Very cool. Just been a heck of a supporter of the channel over the last couple months, man. It's amazing to see some of these new subscribers. And Travis, you may have been with me for a year. Trust me, man, there's a lot of people on the channel, but it's just killer to have you in the group here. And thanks for accepting my invite. I think you and another individual that I've been talking to who are new to the community, I was like, man, you got to come into the community, into the live feed. So it's cool to see you come on in here, man. Very cool. Hope everybody's good. I'm good. It's just good to see you, man. Good to see you. If you got any questions, hit me up. Certainly. Les is in the group. NVIDIA is killing me, but we will see where it is in 10 years. Did I recommend NVIDIA for you? Man alive. Did Rose tell you to buy NVIDIA, or did Ryan tell you to buy NVIDIA, or did Les say to buy NVIDIA? I thought I told you to buy Intel instead. Intel's holding up pretty nice. Maybe even a Cisco before an NVIDIA. You know, if you wanted your exposure to NVIDIA, could certainly, I think NVIDIA is in the tech spider ETF in Vanguard, if I'm not mistaken. That's another position that I added to over the last couple weeks as well. So yeah, just, you know, it's those high growth, man. And if nothing else, it teaches you how quickly a stock that's absolutely beloved. NVIDIA went through a period there where it was absolutely beloved in the stock market. It never went down, never. And it just kind of shows you how susceptible any stock can be. It doesn't matter if you're an Apple, you know, who's off 25% now, you know, Google, Facebook, Amazon's getting crushed right now, you know. It just goes to show you that the swings that you have to be able to incur if you're going to be a single stock owner, it's better to have those other buffers as well in the portfolio, but you have to be able to weather those single stock exposures. You just have to have a tolerance to wider swings in those stock ranges, because when you look at those 52-week ranges, all right, it's a range for a reason, okay? Not every stock just goes up to its 52-week high and breaks its 52-week high. That 52-week is typically resistance, all right? And the 52-week on the low side is typically support, all right? Now, I'm not a technician to a point where technicals always work. It works until they fail. That's the saying with technical analysis. But just keep in mind, guys, that stock Stock it requires a little bit more of a heightened tolerance, and I love to see you guys with that baseline. And don't ever discredit the potential of just being passive the rest of your life. If you want to add some of those, very good quality stocks to your portfolio, really ask yourself, what if the stock turns the page and it stops, really being good to my portfolio? Just got to be careful with that kind of stuff. But, hold NVIDIA. It's a great company. And I think you'll be fine long term. You're just going to have to ride it into a little bit of a downturn. All right. Stocks are volatile right now, and the high growth are the ones that are getting trimmed the hardest. All right. K97 says, Ryan, any reason you are not adding energy and materials ETFs? Yeah. Hey, that's a killer question. Materials, actually, I was just thinking about before I came on the live stream. I'm a dork, so I think about stock every now and then and again. But there's no real reason for me to add the Sector Spider Energy ETF. And here's why. My exposure to energy is met through single stock exposure. All right. That might not be in line with the whole idea of diversification. However, I'm getting my diversification through staples, utilities, technology, industrials, and one other. If you'd bear with me, one other, discretionary, but I don't think I've added the discretionary yet. I do intend on doing just that. All right. But as far as energy goes, what did I say my sector recommended exposure is in energy? 8%. So I'm right at 8% right now with my single stocks that I hold. So that tends to give me a little bit more exposure. And they're big players. Royal Dutch Shell, Chevron, Exxon, which are all, of course, in the energy ETF. Marathon Petroleum I own. I'm very excited to own that stock. It's freaking awesome. And I think that's all for energy. Yes, that's it for energy. But if you're a new investor and you don't want to go the single stock route, it's just I already held those holdings in there. So I went ahead and just kept that ETF out of it and stayed with the single stock. You can gain your exposure in either way, okay? One is obviously not diversified. The other is diversified within that specific sector. It's just that I left that out when we're talking about the energy. It's a killer question. Thank you. That was my very simple rationale for that. On the material side, I've got 2.2% of my portfolio in materials, and I don't know if it's through my Dow DuPont holding, which I'm getting crushed on. I'm down big in Dow DuPont. Dow DuPont it's a buy right here. I don't know what's going on. So if Jared Odell is still listening to me, I would look at Dow DuPont right here in the low 50s. Just insane. I just can't believe it. They're talking about a triple split of the company. 3 different companies coming out of Dow DuPont. Now, when it was Dow, got with DuPont, that's when I bought it, and it's gone nothing but down. But it's that might be where my actual materials exposure is held, and that's part of the reason. Now, that's a 3% allocation recommended, so don't have to do a whole lot. If there's going to be any sector that I overlook, it could be materials. Okay, it could. All right, it's not one that just overexcites me. I'm more excited about some of the single companies in there. APD is one of them, and Praxair is the other one. So I think it's Applied Products. It's out of Germany. You guys know the one I'm talking about. The ticker symbol is APD, I believe. It's in my noggin. But yeah, APD. But those are some of my favorites, and I would honestly opt to own my materials. Vulcan Materials is another one of my favorites, but just to own my exposure to materials through single stock as well. And I'm not saying one is right or over the other. It's just that if you're a new investor, you provide that as a solution in a portfolio. The other option that I'm going to talk about is the total stock avenue. And I don't think there's any one that's more right than the other. I just think on the channel, we try to provide clarity on all the options, right? So new investors can really resonate and kind of say, hey, this fits for me, or this might not fit for me, applying kind of the same rationale that I do when I was building my portfolio there. So good stuff. Mike O, M1 was killing me this morning. Phone was freezing. 2 minutes to 10 minutes cutoff time. Oh, that's interesting. Yeah, most everybody's talked about. I didn't think their customer service was that good. That's just my opinion. A lot of folks have went with them. That they're one of the top 3 brokers I recommend. And until I start getting a bunch of negative feedback, which I have not, most of the feedback on M1 Finance has been extremely positive. And contrary to my own personal opinion, I'll still recommend that as a solution until it stops to be an option for people that I feel is not conducive to people's investing needs. So really good stuff. You have a great memory, Ryan. Very impressive. Thank you. Not too bad for a 41-year-old. That's right. And I've abused it over the years. I'm a very hard worker. So thank you. I appreciate that. That's very kind of, you got a smile out of me after an hour and 30 minutes of a live stream. And we're going to try to get to the end of this. I'm about a quarter of the way left on the comments here. MO has been added to my M1 pie. That's interesting. That's awesome. Thank you for offering that. I always like to see those stock picks that go in there. That's really cool. Good call with MO. I agree. I have a good show. Wish I could stay. Hope everyone has a good night. Enjoy the conversation. May we learn and prosper. Chester, thank you so much for stopping by. Really good to see you, man. We'll see you again next week, honestly. Tell all your friends. I'd love one of these live streams to be actually over 100 people. I think there's some people. Scribner asked me if I enjoy doing live streams. He says, a lot of YouTubers don't like to do it because it's just not very successful. There's not a lot of people that come and visit. I think it's cool that 70 people have come into the group and to talk. I think it's cool, you know. A lot of loyal folks, some new folks, some legacy folks as well. But all the same, it's still providing a window of opportunity for anybody that's associated with the channel and come on and talk to the person that's putting out their niche content. I think it's cool. And I would appreciate that if I was on the other end consuming the content. I would think that was a pretty cool gesture. And that's the way I honestly feel, and that's the way I do it. I could care less how many people come into the group, but I'd like to one of these to get up over 100. I think it'd be kind of cool. So I have a defective IVC filter in me developed by J&J. Hope it lasts. Exactly. Yeah. See, those are the types of things that, you know, you really got to have sensitivity to. Certainly these large companies, man, it just, you know, they come out with products, I think, to be the well-intentioned. And it's really sad that I think they're trying to be on the cutting edge of research and development. And sometimes it just doesn't work out. And yeah, my heart's with you, Mike. Certainly. I agree. And it's tough, man. There's no perfect life. I think there's just life in general. And I think that goes with anything that we do. You know, we do the best we can, and you know, we certainly try to make the best of it. We really do. So let me try to scroll down through the rest of these here. There are too many stocks on sale. Hard to pick just one. Man, I don't know. I look over the landscape and I don't see a lot of for sale right now. I guess I'm just coming from a different perspective to where I saw it in 2008, and it was insane. And you put me in that environment with this mindset now into 2008, and I'm buying on margin. Just kidding, but I'm really putting some serious freaking capital to work if you put me in that situation, and I'm waiting. My savings capital has been there for years, and that's where it'll continue to be. But I think there are some opportunities. I do. I don't think there's maybe as much as you say. There's too many stocks. You know, there's some good blue chips, but the blue chips really haven't moved that much. I think there's some really, really good value in the high growth if you haven't been invested in them, right? I think Facebook being the number one, that's just an easy call. Easy. It's not that difficult. Don't read into it as far as you need to. It's a fantastic company. Every company has to do business with them. And it's the conduit to 2 billion people. It's that simple. It's not that difficult. That's like shooting fish in a barrel with Facebook. But yeah, there's a bunch of other ones too. I like on the value side. I like AT&T. I like Cisco right here. You guys know, I mean, I picked up Morgan Stanley today. That was easy as well. Good pickup. I think Apple is a buy here. I think it's good. There's too much value there. So when you talk about the the degree of the value, I think when you're talking about degree of value, I don't think Apple needs to be ignored here at in the 160s. I think there's a great value there to be had. Guys, I put $5,000 of my own money to work. I'm not just on here BSing the community. That's what I actually did today. And I don't need to show you my brokerage statement. That's what I actually did. I bought 30 more shares today. Do the math. It was $4,900. So this is what we did. So the Dow drops 500. Yes, it did. Hey, Ryan, what do you suggest to be the best method for someone to make $50,000 of consistent dividend income? Have $750,000 invested into high quality dividend stocks. I get asked questions like this all the time. You know, obviously 8% on $1 million, we're talking about $80,000 minus taxes, etc. Certainly love to see those, tax-free earnings come out of a Roth IRA, and that's the importance of filtering that in there over time and getting those to accumulated growth. That's a very luxurious position to be in if you can save your account up enough to where you feel comfortable keeping it subjected to the market. Because remember, to make that 50%, let's say 5% of dividends on $1 million, will get you your 50 grand, okay? You still have to keep that $1 million subjected to the market for 365 days. Are you willing to take $1 million of holdings and run it through the volatility that we've had over the last 2 months? Be honest with your answer. Be honest. I don't think I am. And I've got a sharp razor risk tolerance to the stock market. Razor sharp. But if I'm 60 years old and I'm retired, what is the use of keeping that 100% tethered to the stock market? You know, realistically, $1 million is going to be split up in a portfolio, right, that's balanced, that's got a wonderful exposure to fixed equities. It's got a wonderful exposure, sure, still the stock, but less than it had when you were 20, 30, or 40, right? So the income that's generated from that portfolio, I think the idea more so is to build that portfolio up to take tax-free liquidations on that money in retirement. And I'd love to see everybody have more than one retirement account if it's possible. Perhaps maybe the 59.5 kicks in, provides a stopgap between that and when Social Security kicks in, right? Think about those types of things. Somebody asked me just the other day about why invest in a Roth? When is it eligible for withdrawal? It was along the same lines of that question. What could you expect to have in the account, etc.? And I answered the question in a different way. Wouldn't it be interesting to give yourself the choice? Here's the thing. If you don't invest at all, you get to that 59.5 impasse and you're like, wow, I wish I would have invested. Or what is it that I'm going to do with my money now? Should I keep it invested? Should I take a partial withdrawal? You know, should I set up a monthly allocation? You know, at least you're giving yourself an option. But to answer your question, you know, $1 million at 5%, you know, a good fixed equity portfolio should be able to render 50,000, but that's not a guarantee. You could go through a year and have a down year in your fixed equities portfolio, and then you have nothing. You have no dividend investment or income. So things that you kind of want to think about. I think it's fun to ask that question, but I think it's in a perfect world that situation even exists, honestly, to have this magical $1 million. If I was bestowed $1 million right away and I could just invest the money in my brokerage account, could care less about the tax implication, then I could do something like that and say, you know what, I didn't need the money yesterday, but now I have the money and I have to do something with it. Perhaps maybe I can build a killer dividend portfolio of nothing but blue chips, to realize that 50,000 of income. But that's not a real situation. Real situation is to do it like I'm doing and build it up over the years. Now, I hope I'm at 7 figures someday. I'm on track for 7 figures. Will I get there? I don't know. I don't have a crystal ball. I don't invest with that. The plan means more to me than anything, okay? And if I'm on track with my plan, I'm happy with that. Where we end up in the future, who's to say? But as long as I'm doing everything that I can possibly do now, I can live with my results later on in life. I really can. I'm going to try to finish up, guys. We're at minute 40 now on the live stream. There's still a ton of people in the group here, man. So I appreciate you sticking with me for close to an hour and 45 minutes. Very good stuff. Really appreciate it. So I'll hang in there with you, man. You're getting some bonus time. That's typically when I start to deliver my best material, to be honest with you. I squeezed an extra 500 from my budget this month. What would you buy? That's pretty amazing. $500 for your budget is you squeezed pretty hard. $500 into one position right here. It depends on what you need in your portfolio. Obviously, you put me at a disadvantage, Jerry, by not telling me, what sector you're looking at. I think tech is really recessed, but I don't know if I would touch tech with $500. $500 to get you a pretty good position in AT&T is a good one. Kraft Heinz Food, certainly. Pick up, close to 10 shares. I know that's going to put you a little under budget with the 10 share position in Kraft Heinz. I'd have to think about that one and certainly, think about what it is in respect to your portfolio. But $500 doesn't buy a whole heck of a lot of stock. But I mean, you could put that into the ETF right here. The market's down, so it's becoming more of a buyer's market as it adjusts back. But 500's tough because I want to say General Electric, but I know I'd have everybody leave the group right now. But who knows? That might be the most prudent call. Just go ahead and put a nice $500 stake on General Electric and watch your money double over the next year. Who knows? I've got 298 shares of General Electric right here. I'm happy to own them. I'm thinking about doubling that position. So if it goes to $6, I will. I'll be buying more General Electric. So it's a good question. You put me on the spot a little bit to make a recommendation to you. I don't hesitate a bit to do that for you. But 500 doesn't buy you a whole lot. It's kind of why I'm in that camp of, 10 shares of Mondelez will work. Kraft Heinz I like, stay in the 30, 40 dollar mark. If you need to stretch it to 50, so be it. Cisco is always a great option. Add 10 shares of Cisco to the portfolio. 10 shares of Intel will work. There's one more that I just think I'm missing right here, and I can't think of it for you. And if I do think of it, I'm going to throw it out there for you, Jerry. So pay attention. Got a couple more minutes left on the live stream here, man. I certainly want to get to everybody's question. I couldn't resist Costco today. Absolutely. Great job. Costco should be one of those, Bob, that you buy and keep forever. I should have waited, but down over 8%, that's nothing. You're good. In a day seemed like an opening for a stock I've wanted another weak moment. Nah, you're good. 8% down, that you're good. Don't worry about that kind of stuff. Listen, you're honing your skills as a stock investor, okay? A company like Costco was the same company that was before you bought it as it's going to be next week, okay? It's the same company. Trust me, all right? I think you're good. And I may follow suit and pick up some Costco as well. It's one of my favorite names in the space, one of my favorites. Costco is a great, great cornerstone in a portfolio. Could have made the list of stocks to own forever. It would certainly be in the top 15, probably right alongside Home Depot. But Costco's right there. I endorse that move. That's a big one. That's a good one. Awesome, Bob. Thank you for sharing. Heard about J&J and what they just found out. You bet. Glad to be part of Lydia's group. Well, thanks, Mike. I'm glad to be part of it as well. Thank you so much for, it's pretty cool. Pretty sincere in her approach, man. That's again what I gave kudos for, and I don't I don't say that stuff lightly. If I say it, I mean it. It's that simple. So I like the sincerity, and hopefully the folks see that in myself as well, because I just genuinely am. I care about the topic. I care about the well-being of the people who receive my message. If they're not getting any value out of it, then I will walk away. It's that simple. That's the same way I feel. You're always so kind to me. Thank you. It truly means a lot. Come on. It's not a problem. Lots of great people out there. The connection through social media is a good one. It really is. It's cool. Bring a lot of like-minded people together. And I think together it can be very, very, very powerful message, no doubt. Just stay positive. Keep pressure on YouTube. And pretty soon you'll be at your 10,000 as well. It's pretty cool. 1,000 subscribers is awesome, because now you can monetize the channel. It's pretty cool. I remember when I made my first 7 cents on YouTube, and I was so excited because it was like the first little stint of passive income that I had ever got. It meant everything to me. It wasn't about the 7 cents. It was about, you know, the intent, you know, it was just about the fact that I just made some passive income, and it was pretty cool. So good stuff, man. I got Officer Towers here in the bottom, man. One of my favorite buys is buying another Berkshire. Wow. Yeah, you're the second one that's mentioned that. I'd really like to own Berkshire. But you know, they don't pay a dividend. I've never really been an advocate. Every time I've bought Class B shares, if you guys would like to give me a couple of Class A Berkshire Hathaway shares, I will take those. That would be great. One of these days, I might have enough to actually buy one Class A share of Berkshire. That would be fun. Just put that in my portfolio and be done with it. You know, just one Class A share. But I'm not really. I know if there was ever going to be a Class B share that I own, it would be Berkshire. But and it's a good holding. They don't pay a dividend. You know, so there's a few things that I look at. I may look at BlackRock. Again, I sold it for a huge profit. It's come back again. I may buy it again. We'll see. But I'm more interested in buying BlackRock than I am Berkshire Hathaway at this point. So I just think it's a better value. I do. But Berkshire is really tops of the list there, man. It really is. Good stuff. Scroll down here. I got Doug here, last one on the list. A lot of newborn. Oh, man, it just jumped again. I've got just a million people in here. We may have to go for another hour, guys. I'm just kidding. I've got about 3 or 4 minutes left, man. And I missed a ton of these questions, and I apologize for that. I don't know why this does this. I try to fight through it every single week, but it jumps like 100 comments in here at the same time. So for you guys that I did not get the questions to, I'm actually running out of my voice. Otherwise, I'd stay and sell out for you guys. But this isn't going to be the day for it, man. I'm actually very tired. My eyes are closing. I do have another job. I do put food on the table, not with YouTube earnings. I certainly put my message out there for you guys and the benefit of everybody. So I really appreciate you guys joining the live feed. It was very, very successful tonight. Certainly, if you joined in, you've got a piece of information that you can deploy. You want to pay me back, hit the thumbs up button, man, on the live stream before you take off and slam the door in my face. But I am going to sign off, man. I just appreciate the heck out of every one of you guys. No doubt about it. Wouldn't be a channel without you guys, and I fully acknowledge that. I'm really just here to facilitate the discussion, and I'm glad to do so. But I will sign off. I'm going to enjoy the rest of my weekend, guys. We will see you again next Friday again for the pre-Christmas live stream. I do look forward to that. Hopefully, we're talking about a little bit better positive stock market next week when we reconvene next Friday. So look forward to that and look to see all you guys back in the group next Friday. Have a great rest of the weekend, guys. I'll be signing off now. Thanks a lot, and take care to everybody.